Welcome back to Halftime Report on CNBC-TV18. As of now, Nifty 25,970 levels, just where that is just slight bit of a green there. 16-point uptick right now for the Nifty 50. But let's move on to our Movers and Shakers segment, where we track a whole host of stocks on the move. First up, let's talk about Dr. Reddy's. That's the one that we're keeping an eye out on today. What's the reason for this one?
Well, yes, Dr. Reddy's is in focus because the European Commission has granted marketing authorization for a biosimilar, which is basically AV203. It is the biosimilar version of the biologic drug Prolia or Denosumab, and Xgeva, which is also Denosumab but is used for a different thing. So now Prolia is a prescription medicine which is used to treat osteoporosis, and Xgeva is a prescription medicine which is used to prevent bone complications in adults. So it's basically used for bone conditions and for two separate conditions. Now the EC decision, which is basically the European Commission decision, follows what was a positive opinion that they had received in September of 2025 from the Committee for Medicinal Products for Human Use in Europe. So it is positive news. Dr. Reddy's has licensed this product from Alvotech, which is the developer. Dr. Reddy's is the commercial partner with semi-exclusive rights for Europe and the UK. Analysts say that this is a positive development for its overall European business. So that's on Dr. Reddy's. But Yatra is under pressure in today's trading session. This is after its CEO has resigned, citing personal reasons. Well, Mangalam, tell us more about this.
Well, you know, there is a management transition in Yatra.com, and the manner in which it has happened has the street a little spooked. Why is that? Because Dhruv Shringi, who's the CEO, has resigned for personal reasons with effect from November 24, 2025. So it is an immediate resignation, and with immediate effect and for personal reasons, no further reason given beyond that. At the same time, the company has appointed a new CEO as well, Siddhartha Gupta, who's been appointed with effect from today, that's November 25. The important part is that Siddhartha Gupta brings with him a fair amount of pedigree, a fair amount of experience, and good skills as well. Could this have been managed a lot smoother than what it has happened is something that the street is still on tenterhooks about. Dhruv Shringi has been appointed as chairman board of directors, so in a way he's been elevated from CEO to the chairman of board of directors. But again, the reason being personal and the exit being immediate has the street a little spooked, but which is why the stock is lower. No real problems from a business standpoint, though. If you look at their second quarter numbers, revenue was up 48%. EBITDA has actually seen a jump for almost 160%. Net profit up by almost 95% as well. They added 34 new corporate clients with a potential billing of about 260 crores as well. Cash and equivalents on their books close to around 213 crores. Air bookings grew by 12%. And remember, this is the company which is a market leader in corporate travel. So all these factors fundamentally doing well for them, but just this little management transition which has happened in an abrupt manner has the street slightly perturbed, and that explains the 6% drop. But a stock that has been surging all through this morning is Restaurant Brands. Remember, they run the Burger King chain in India and Indonesia, along with the Popeyes chain in Indonesia as well. Vivek joins in. Vivek had yesterday told us that there is the likelihood of Everstone selling out, and we're revisiting the story after the big move that we've seen on Restaurant Brands. Vivek.
Well, that's right. Like you summarized it so well. So Everstone Capital, remember, is the private equity that controls and manages Restaurants Brand Asia. It was earlier known as Burger King, and they run the Burger King franchise across India. Popeyes, like you mentioned, in Indonesia. While we understand that, in this particular deal and in Q2, itself, the management had highlighted that they are looking for an exit, especially as far as the Indonesian part of the business is concerned. What we understand from us is that, especially when it comes to the Burger King franchisee, Everstone wants to cash out. They want to divest their stake completely. They've been paying their stake, via tranches over a period of time. They're now left with around a little over 11%, but we understand that this time around they are keen to sell it all at one go to an interested buyer. In fact, we understand the bidding process is on. The bids have come in. We understand the family office of a large listed company is in the fray, along with a few other private equities. Especially when you're talking about the listed company, we understand they do already have some interest as far as the QSR space is concerned already. Now, when it comes to the ownership and especially when open offer rules of SEBI, it's interesting to note that despite the fact that the eventual buyer will only need to buy out a little over 11% stake, given the fact that this is a change in the ownership of the management, there will be a triggering of the open offer. in case this particular deal does fructify. So that's an important development, and we understand that the bids have been coming in at a premium to the current market price. We reached out to Everstone, they refused to comment, and we are awaiting a response from Restaurants Brand Asia, the management of Restaurants Brand Asia.
Okay, all right, Vivek. Thanks very much for that. So that's Restaurants Brand Asia. That stock is up around 3% at this point in time. Well, for the markets, extremely quiet as we speak. So we have the Nifty, which is just about higher by around 5 odd points. But there's always a strategy, and there are always stocks to focus on. So we're going to do just that. On the other side of the break, we have Aditya Agarwal of Invest4 Edu, who will be joining in with some trading calls. Stay tuned.